Hello everybody, this is Patrick McGuire from the North Shores Real Estate Group with RE/MAX Advantage. I want to bring you another multifamily today. This is 9 Pierce Ave in Beverly, Massachusetts. Right now it just came on the market yesterday for $499,000. And this is really what we want to look for. This is one of those 3 units. As you can see here, first unit is 2 bedrooms, second unit is 2 bedrooms, third unit is 3 bedrooms. And that's really the sweet spot there with those 3 units, multiple bedrooms. Now they have down as rent for the first and second unit, those 2 bedrooms, at $1,500 and $1,450. I think that's unrealistic. From the pictures, which I'll show you in just a second, it does look like a nice property, but that is rather high for Beverly for a 2-bedroom. Now with the unit 3 that has the 3 bedrooms at $1,550, that seems reasonable. I kept that the same. The other 2 I estimated to be about $1,300, so a little bit above average, where Beverly averages out at $1,200 for a 2-bedroom. And if we run down here, we can see the pictures. Hopefully they'll come up on the video. It looks clean. It looks well kept for. So I think you could get those above average rents. Let's go and break down a little bit about the money. So here I went ahead and ran all the numbers here. I kept the purchase price. It might be a little bit lower, but we'll have to look at it and see where it goes. Down payment at 30%, which is normal for an investment property. Closing costs averaged out at $8,000 with a mortgage rate of 4.5% and appreciation rate conservatively at 2%. Historically it's 3%, but we like to keep it a little bit low so we know our numbers are going to be accurate. So with those 3 rents of $1,300, $1,300, and $1,550, that gives us an annual gross income of $49,800. I assumed a vacancy rate of 5%, as you would in the area. Operating expenses about $8,100. Rent increases 3% a year. Annual expense increases probably 2% a year, to be conservative. Alright, so this is the breakdown here. You can see on this orange bar. You can't probably see the numbers that pop up, but I'll tell you what they are. And this is for a 15-year mortgage. So over 30 years, this will actually net you the most money. But it starts out a little low at $7,146 in cash flow before taxes. And it'll continue like that, slightly rising until after you get rid of the mortgage, and then boom, it balloons up to $62,805 cash flow every year, and it goes up from there as it appreciates. Now what's really interesting about this property is when you go from a 15-year to a 30-year, boom, you can see that all change, and right off the bat you're getting about $18,000 a year in cash flow, which is a pretty good number. If we go over to our calculator here, now this is estimates with the different down payments. It'll show you how much you have to put down and what the annual cash flow will be on the first year. You can't do 10%, you can't do 20%, but 30 and up to 100% is good. So what this shows is with that 30% down, you get that $18,000, and your cash on cash return is actually going to be over 11%, which is really nice to see. And it actually goes down from there. This is the kind of property you want to really leverage your assets. Have the renters pay off the mortgage, and then you can just keep getting the money every month. Okay, so that was 9 Pierce Ave in Beverly.